Right now, times are tough for a lot of people financially. Prices are up, inflation is real, and for some, it feels like we are in a recession. And let's be honest, some investment strategies just aren't working out like people expected. But I want to share something with you that has worked consistently for us. No matter what's going on in the economy, since 2021, my partner and I have been running our private money lending company, and we funded over $5 million in real estate deals. Everything from fix and flip investment properties, buy and hold properties. Even with all of the market uncertainty, our returns have stayed steady and consistent. We consistently generated 16 to 20% returns year over year on our capital, regardless of who's in office, inflation, or what's happening with interest rates. In this video, I'm going to break down 5 reasons why private money lending is recession-proof, and then I'll give you step-by-step game plan to help you get started with your own private money lending business in 2025. Let's get into it. Why private money lending is recession-proof? First, people still need capital, especially when banks pull back during recessions. Traditional banks tighten up their lending criteria. That makes it harder for real estate investors, business owners, and even homeowners to get approved, even if they have solid deals. That's where private money lenders step in. Less competition from the banks equal more deal flow. Higher demand for fast, flexible funding. Number 2, real estate doesn't stop. Even during downturns, real estate investors are still flipping distressed properties, picking up rentals with better cash flow, buying foreclosures, and buying properties from motivated sellers. All of these strategies need fast access to capital. Number 3, asset-backed lending equals lower risk. Private loans are secured by real estate, not just someone's credit score. If a borrower defaults, you still got the property. You're not just hoping they pay, you've got collateral. Also, even in uncertain times, real estate is not going to depreciate, unlike the volatility of the stock market. And if you stick to your loan to value, at Vertical Capital, our loan to value is 65%. Your downside is protected. Number 4, higher rates equal better returns. Even in a recession, private lenders can earn double-digit returns, 10 to 13% or more. Stocks might dip, real estate might cool off, but lending still produces consistent returns in cash flow. Guys, if you like this content, subscribe to the channel. Number 5, you could be more selective. Recessions forces the best deals to rise to the top. As a lender, you get to tighten up your lending criteria, choose stronger borrowers, charge higher rates or more points. You're in control. Before I show you how to get started, let's talk about something that's important: deciding if this business is the right business for you. I like to break my investment strategies down into 2 buckets. You have long-term, like buy and hold real estate. It's steady income and it appreciates, but it's slow and consistent. Then you have short-term, like fix and flips. You might make quick money, but you have to do it again and again. Some people will decide to invest in something not knowing what bucket the investment fall in. I remember when we started Vertical Capital, we had an investor that invested $50,000. This was our minimum investment when we first got started. And the way we are structured, we do everything for our capital partners. We market for the borrowers, we underwrite the property, service the loan, manage the draw process, and do all of the capital distributing. So it's 100% passive investment for our capital partners. But I remember this particular capital partner saying that she could get better returns with her own money. In my mind, I was like, I know you can. You're not telling me anything that I don't know. The thing is, she didn't know what bucket she was investing in. She was expecting short-term gains with a passive investment. And that's not how it works. If you want to run a private money lending business, you'll see consistent cash flow and get some lump sums. But you got to be active. So you have to decide if you want to be a passive investor or an operator. And if you're looking for a short or long-term income, for me, you have to have that thought process for every investment you're thinking about. So once you got clarity on that, the rest becomes easier. Here are the 6 steps to start your lending business in 2025. Step 1, gain real estate experience. You don't have to be an expert investor, but you should understand how deals work. If you lack experience, put processes in place to protect yourself. For example, if you struggle to estimate property value, require a third-party appraisal paid by the borrower. Step 2, start raising capital. If you already got millions, that's great. But if you're like me when I started, you'll need to raise funds. And start with family and friends. And I know that sounds cliche, but listen, there's $44 trillion in US retirement accounts. Half of Vertical Capital's lending portfolio comes from retirement accounts. At first, we only targeted people with cash, but once we started focusing on people with retirement accounts, we raised $500,000 in 1 week. And if you want to learn exactly how to implement these steps, join our Vertical Capital Finance community for free. You'll get access to 2 of our finance courses, plus a community of like-minded people. Step 3, underwriting. Not only you need to know the property value, you must underwrite the borrower. You need to make sure the borrower checks out. At Vertical Capital, we don't check credit, although we make sure the borrower has a track record of experience in the financials to be able to afford the loan. We had to learn this the hard way. I remember when we first started, we funded a loan where the property checked out, but the borrower didn't. It was a headache the entire loan. So always set your lending criteria and stick to it. Step 4, get proper loan documentation. Your docs are your protection. You need your loan agreement, mortgage or deed of trust, promissory note, ACH authorization, proof of insurance, general contractor's license, letter of intent, and so much more. So don't skip the loan docs. Step 5, you have to market for borrowers. You don't just sit back and wait for deals to come to you. I used to think saying I'm a lender was enough. It's not. You need to actively market your services so you can choose the best deals, not just the ones that land in your lap. Step 6, understand loan servicing. This is where a lot of people mess up. Create a draw schedule for rehab projects. Require inspections before releasing funds. Never give the full loan amount up front. Loan servicing is key to keeping your money safe and your borrowers on track. And there you have it, the 6 steps to starting a recession-proof lending business. Just remember, lending is all about shifting risks. In tougher times, you don't stop lending, you just adjust. Tighten your criteria, protect your capital, and keep lending. If you found this valuable, subscribe to the channel and let's build recession-proof wealth together.